Coming up on this episode.
What are some of the key considerations one should have when they're thinking about investing in the stock market in general?
You must invest in some knowledge in the market.
Set your own personal financial goals.
I've looked at my goals. I have 5 years to be able to invest. Why this one and not this other one?
Start with the management. If that business is not there tomorrow, then what happens?
The person who was advising me on what to do never put in effort. So I became his boss. I am one person who loves sports. I've played golf for 30 years.
The ICIFA Investment Show, sponsored by Dye & Blair.
Ladies and gentlemen, welcome to the ICIFA Investment Show, where we showcase products that are available to you in the region and professionals that you can reach out to when you need them. I am so excited to be here. I will be joined by a fantastic guest, and today we are going to be looking at investing in the stock market. What are stocks? Why should we invest in stocks? Are they a great investment opportunity or not? We'll be looking at that today. I am joined by Leah Nyambura. And Leah, karibu sana to the show. Yeah, you are most welcome here. I am so thrilled to have you on the show. Leah is Director Corporate Finance at Dye & Blair Investment Bank, but beyond that, she is a Vice Chair of ICIFA. And so we are so honored to have you here, Leah, to help us understand about stocks and shares. But before we get into that, maybe you can tell us a little bit more about yourself.
Thank you very much, Rina. And I'm happy to be here and grateful that at least we are teaching Kenyans what we know and things that are going to benefit them. I'll start by a brief introduction of who I am. For me, I would say I'm a lady who's self-driven, a mother of two, of course a wife. And I love that because as I take you through this investment, I'm also looking at the future. And I would want all the generations, especially the current ones, to be able to adopt and embrace investing so that at least we'll be able to have a more vibrant investor base that is able to understand well what is investment and how they can benefit from investment in stocks. Where I started at Dye & Blair, they were founder members since 1954, amongst the oldest 5. And so we had a lot of an aging sort of investing population, and all they knew is I come with a paper, I buy shares, I get a certificate. And that was the market then. And then the shares would then be released to the market through a very basic system, but still paper. And the traders would go with paper. The red jacket, they would wear the red jacket and then go to a market, just like the market the way you know it. And they would just shout prices. I'm buying this, who can match? And once they match, they just close. And that's how it used to happen. That was open outcry. So I've seen all the transition from that into now the local area network, whereby you could sit with a machine or a laptop or computer on a desk, but outside in one central place, which was then still the market. And then you could trade from there, and then you match the trades, the buys and sell, the buys and sell. And those days they were doing only 3 hours, I think 9 to 12. And then from there we went to now you could be able to trade from your own desk, which was wide area network. And then from there, at least now you could match with a system, the buys and sells from the entire market, but you just sit in at your desk. And then after that is when now we went to dematerialization, where we don't have paper, you don't have certificates. You now have like a statement from the Central Depository System, a corporation, and you just have a statement just like the bank statements that you receive. But now it shows you your shares, the ones you've bought, the ones you've sold, and all those balances. And we could receive a statement every month. I think we still do. And that's opened us now to now automated trading system. So I've seen all that. From being now client facing, I went to research. Here is where you analyze now stocks. What do you buy? What fundamentals do you look at in terms of now assessing the quality of the company?
Yeah.
And now you could look at the management first. Then you look at the numbers now, the earnings, the margins,
In fact,
are
that's
they
where
making money?
That's where I want us to go next.
Yes.
That's where I want us to go next, because one of the things that we've seen, like in the last, year and a half, as we've gone into a pandemic, prices of stocks have come down, and then year to date, we've seen an improvement in stocks since 2020. Now, from January to date. But a lot of people are still feeling, can I buy now? Should I buy now? We're going to an election season. What should I do? And I want us to start from the beginning. Just what you're talking about. I mean, you've been in the market for a long time and you understand how to analyze companies. What are some of the key considerations one should have when they're thinking about investing in the stock market in general?
Well, to start with, first you have to set your own personal financial goals, because you're putting in money. So what are you expecting to get from that investment? What sort of returns do you have in mind? And if you don't have any clue on where to start, you can always look for an expert and they'll guide you in terms of the returns. Do you want to perhaps get double your money? And is the stocks or the stock market going to give you that? Is it realistic? Once you set that, or once you're sure of what you want to do, of course you want to get a return, then you can now look at the stocks themselves, the quality of the stocks. We call them the fundamentals. It's basically the quality of the company. What does it do first? If it is Safaricom, what is it selling? Does that product have a market? Are they making money out of it? It's the basic questions you can ask yourself, even when you're buying anything like land. This location, is it viable? Is the land going to appreciate if I'm planning to sell it? Those kind of questions. It's the same with stocks. So you look at the quality of the company, the quality of the management, the track record in terms of how have they been performing historically in terms of the earnings, the profits. Are they strong from a balance sheet perspective, the assets they own? But this can be done by the financial analyst or the financial advisors, which is where now even ICIFA comes in, because those are the people who want to give you professional advice so that you're able to make that decision, an informed decision, from a point of view where now you can choose just the quality stocks that you want to invest in. Because we also don't want you to lose your money. Because the next thing you consider is, are there capital gains? Because as there are capital gains, there are also capital losses. You can make losses. Some companies even go bankrupt. Yeah. It can be delisted, it can be suspended. We have the Deacons, we have the Eveready. It can just be there, it's not performing well. We have the Mumia Sugar, they're not performing. So how do I choose that will make money? Should I run for Safaricom just because everybody is running there and everybody understands it? Perhaps there are others that are not as good as Safaricom, or maybe Safaricom is beyond me, because then again, you have to also look at the resources that you have. Much as there are no minimums in terms of how much you can put, you may not be able to put 100 shillings because perhaps there is no stock that is worth 1 shilling, because the minimum shares you can buy is 100 shares at any given price. If it is Safaricom, if it's at 40 or 42, then it's 42 times 100. So you need, for Safaricom, you need 4,200. It's quite affordable actually for anybody, but you have to now know how much money do I have. From there then, you will use the experts that you have. You go to a broker, because brokers, you have to trade, you have to access the market through brokers, and then the brokers are the ones who are going to advise you on which stocks perhaps to consider given the amount of money you have. The other thing you consider is your age.
Very important.
Very, very important. Because if I am 60, 70 and I've put my money perhaps in, what did I even say? Let's say even a bank, that tomorrow will even not be there, and maybe those are my retirement savings, then what happens to me? Of course, I'll be stressed.
Somebody has heard you say a bank might not be there tomorrow. Maybe you can clarify.
We've had cases where we've seen banks have closed, or even businesses have closed. So if that business is not there tomorrow, then what happens? You have lost your money, basically. Because at the end of it all, even where you have a bankrupt company and it's under liquidation, as a shareholder, because when you're investing, you own a part of that stock or that company. As a shareholder, any proceeds from selling any assets that company has, you're paid last. So you have to consider that. So if you're young, you can take as much risk as you want. You can invest perhaps in very risky stocks. You can be very optimistic. Of course, you'll be guided on the companies. When you're mid-age, you do whatever is mid-risk. Something that You can risk a bit, but at least it's not too risky that you can lose all your money. But if you're old, we would advise you do stable companies. Perhaps you do those who are doing dividends and you invest for a bit longer term, because patience perhaps also determines the price appreciation, usually, especially if the economy is doing very well and at least there are no shocks whereby now everybody is scared. Is it the right time to put money because their politics are affecting us? There is COVID or a pandemic that is affecting us. There is drought. It can be anything that really causes jitters for businesses, also causes jitters for those companies that are listed because they are doing the businesses. So those business cycles, you have to always be guided around it.
You know, for somebody who's sitting out there and wondering, okay, I hear you. You know, there's all these different variables that affect the stock market. I need to pay attention to the weather. I need to pay attention to politics. I need to pay attention to other things that are unexpected, and also look at the fundamentals of a company, which means how they're performing and all of that. And it can sound a bit overwhelming. Where does somebody begin? You know, so I know I am young, I want to invest for the next 10 years or for the next 5 years. Where do I start?
Okay, that's a good question, because the starting point, fortunately for us, is that at least it's regulated. The market is regulated. You can only access the market through an expert who are under brokers. So those are the ones you'll go and ask all those questions, because they should be able to analyze for you, is the weather right? Are the politics right? Yeah. Is the dollar right? Because say you're investing in EABL, and EABL is deals with sorghum, or it makes its beer from sorghum. Then it has contracted some farmers, say in Kisumu, and then there is drought in Kisumu. So the whole crop perhaps has been wiped out, maybe by a flood even, or even it's too hot for it, so you can't even harvest whatever you are expecting. So what happens to ABL? It has to still produce the beer because there is still demand for the beer. So what will it do so that it ensures that that beer is produced at the end of the day? It will import. So where is the dollar? You may not know as a layman, and even as you're starting off, but there's someone who sits to analyze all that for you, and then they will tell you, even if they import, fine, it might be at a higher cost because perhaps even the dollar is this strong, but they will still be able to make some money. You'll still be able to see some returns. You'll still be able to see a price appreciation. So that's why you have those advisors there, the financial advisors, and under a broker, because the broker is regulated, and of course these people are trained to do that. So always ask and be ready to ask. The other thing is, as you come in, bring some money, have a comfort zone whereby you have only the money you would afford to lose. Because if those risks happen, and perhaps you're looking to get out after a year or two, then it means perhaps if there is drought for EABL, it might take longer for you to realize the price appreciation or the return that you are looking for. So are you ready to wait that longer? Or is it going to make your life very, very difficult financially? So those are the things you need to consider as well.
Okay.
Yeah.
I was having a conversation with someone some time back, and they were like, the information in the stock market these days is so difficult to come by. And I was like, what do you mean? And they said that before, the NSE, the Nairobi Securities Exchange, used to give out price lists for free and a lot of information for free. But then now, I don't get this information. I mean, it just seems like it's so difficult to come across information. And I was a bit surprised. But I'd like to hear what your thought is on that issue.
Well, it's supposed to be public information, and it is public information because it's published in the newspapers. Perhaps the cost you will pay is perhaps getting that newspaper. But when you open an account with a broker, they will be able to give you access to that information, because they access it from the Nairobi Securities Exchange. So you shouldn't worry about getting that information. Just inquire. So long as you have a broker or you have opened an account with a broker, they will be able to give you access to that information.
Some people have had very difficult experiences when it comes to investing in the stock market. I mean, people who invested in Kenya Airways, Mumias, Uchumi, due to just, I guess, different factors, those companies have experienced a bit of challenges. And so anybody who's invested in those companies is not doing well at all where their investments are concerned. What would you say to somebody who has experienced those kinds of losses in the stock exchange? Should they invest in the stock market or not?
Okay, that's a good point actually, because you have to always weigh whether the benefits outweighs the costs, or the advantages of investing are bigger than the disadvantages. At the beginning, remember we said there are risks, but you're also coming for the returns. And we all know that the higher the risks, usually the higher the returns at the end of the day. So stocks are classified as risky. There are those risks, and mainly those economic risks or the political risks that can affect a price, but there are also internal risk for companies. We said a company can go under, a company can face challenges, like if you are investing in the tourism industry and there is COVID, there are all these lockdowns. The hotel will not make any money, yet I've put my money there. If you're in the airline, the KQ that you're talking about, the pandemic, those lockdowns, people are not traveling, there are restrictions, then the revenues of course will drop and the price will reflect that. But that doesn't mean that is the end of the world. The pandemic can ease up, or it can end, maybe even miraculously, or it will wane over time. So that's why we are saying put money you are comfortable losing or waiting longer to recoup, because that way it will not stress you, because you can be able to wait until perhaps the pandemic is over, or the drought, or the famine, or any other business challenges that the company you've invested in is facing. But does that mean that you will never lose all your money? You can lose all your money in some instances, where perhaps a company has really gone under, it is delisted, you can no longer recoup any money from that. Even the assets to be liquidated, they are perhaps even worth zero. And remember again, as you are the shareholder and you own the company, you're paid last from any proceeds. How much will be left, especially if whatever is bringing down the company's loans or debt? So you should look at it as, I've put this money. I can lose everything, but I can also gain from it, depending on the circumstances, especially economic circumstances. But now when you come to the advantages, there are many. It's a very easy and good way of utilizing your savings. Because over time you realize you've put money in perhaps a savings account, perhaps the maximum you can earn is 5%. But from a stock exchange, you can even earn maybe 8%, 10%, sometimes even 20%. You never know. Like I look at the index, the NSE 25 index, a year ago, you're counting a 30+% return up, a positive return of over 30%. You look at another index, you're seeing 17%. You look at Safaricom, you're talking of 20, 30, 17, 15. You cannot earn that in a savings account in any bank in Kenya today. That is why they are risky. You cannot earn that return even in a treasury bill or a bond, where you've given government some money, and because their returns are usually fixed somehow, or they don't move that fast and that much, but perhaps they are around 8-10% maximum. If it's a bond, it's 12%. But you're talking of an index. If you had put money in 25 stocks of the index last year, all those 25 stocks, you'd have been earning 20-30% from that. So it's a very good way of utilizing your savings. Number two, you're looking at that return. Prices do appreciate. Even as they do go down, they do appreciate. Number three, inflation. Because the prices of food, your airtime, your electricity bill, they keep on going up every now and then. That price is measured by an index called inflation. So that inflation, the last few years, right now we are around 7%. If you're talking of from 10 to 15 to 20%, then you see you are able to cover that because you put your money in the stock market. The other thing is, when you're investing, you're not looking at really just the short term. If you're looking at the long term, and long term is a year plus, there are dividends that you earn from companies that are doing well. So that is another return. But what I would tell them is balance off. Count your losses, net off if you have to, but then try and diversify your investments. Try and keep, when you invest in a stock, in the stock market, and you had a portfolio of say 3, 4, 5 companies, monitor that over time. Try and keep changing that, or recoup your profit because you had set some goals. Say I wanted to get 10-12%. If I get that, just move on. Get another stock. But if this stock that you had put in money and it has done over 12 and you still think yes, of course from an expert advice, that you can still hold on to it. Well and good. But try and keep your balance in the portfolio that you're investing in. You cannot just come put money and just say, I'll wait and see returns in a year or two. Keep monitoring it.
Yeah.
That is the best way of being an investor in this stock market.
100%. Thank you so much, Leah. It's so true. You know, with the stock market, you cannot invest, forget about it and go away. You have to monitor, as Leah has said. You have to know what you've invested in, how it's performing, and then make a decision. And I love the first thing that she said. She said you must begin with knowing what your goals are. Start with understanding what do you want to be able to achieve, and then you can use stocks to be able to achieve those goals, if those goals are in line with the kind of way that stocks are, which is long term. Thank you so much, Leah. We're so grateful for you. But before I let you go, there's a couple of questions that have been asked by the audience.
Ask your FA.
How do you actually analyze, and you may have touched on it a little bit, how do you actually analyze stocks to know which one do I actually go for? Why this one and not this other one? I know that I've looked at my goals, I have 5 years to be able to invest, but how do I analyze to know this is the one I will settle for?
All right. That's good. And we started with saying that because you can access that information, try and monitor and see which stocks are liquid. You will be able to know that by the volumes they trade every day, by the turnover perhaps that is reported there, but even in terms of the price, how it's moving, how active is it? You start from there. Then you now come and look at the fundamentals of the company, the quality, what we are saying, the quality of the company. Even when you're buying a dress, you look at the quality. When you're buying a camera, say, you look at the quality of that company. It is the same thing with stocks. You want to know the quality of that company. How do you know the quality? What do you look at first? Start with the management. That is what I advise people. Start with the management before you go to the performance of the company.
And a quick Google search is enough to find out who they are.
Yes, and you will know. Let's even say, is it James Mwangi? Everybody knows James Mwangi. Who's James Mwangi? How long has he been in Equity Bank? What quality has he driven from that company since he joined Equity Bank to where it is today? Have we seen growth? Can we trust in his vision? Is he visionary? Is the other management visionary? Are they moving in the same direction? That is the quality you're looking for. You're not looking at the personal attributes of the person per se. So you're looking at the contribution of the management to growth of that company. Is it Safaricom? Who is there? How has it transitioned over time from changing from one CEO to another, or the management to the next, or the board, because that also matters. And is there government in that company? And then you look at yourself. My age, my resources, the time frame. Will I be able to risk with this management? Is there, certainty to some extent, because you can be able to at least tell in terms of this management and where they're taking the company. That is how you assess the quality. Then come to the numbers. The numbers is basically sales. Look at the track record, the historic track record of sales. Is it growing? Look even at the products. Are they increasing the product? Are they innovative? Because that is where the sales will come from. That is where the revenue will come from. Then if they're making this money, how are they utilizing it? Are they spending it all such that you have losses at the bottom there? Are they making money? Are there margins? Are the margins making sense? Or is it just a 1%, 2%? Because net margins of perhaps even 8% is adequate enough at the minimum. But if they're like at 2% consistently for the last 3, 4, 5 years, then you'll start putting question marks. If they're making losses, then try and understand why they're making the losses. Is it seasonal? Is it because they're in the hotel industry and there's a pandemic and there are travel restrictions and you can't just have people coming and occupying your rooms? Or is it permanent? And by when will that end? Then from there, at least you look at what we call cash flows, but now you're going into the depths of, are there any money that is left at the end of the day? Do they pay dividends? Because that's also a signal that there is excess money, they can afford to give me a dividend. Even if they're not giving you a dividend, they're giving you bonus shares. You know, those little things that you hear them announcing whenever they are doing their result announcements, and they are positive, those are the ones you follow. There are so many blogs that also analyze those earnings, even if your broker is not analyzing. And even if you have a broker, don't just follow just your broker, because all the other brokers are also public. Look at what the others are saying.
I think that's so important, because you can't just listen to one voice.
Exactly.
Because nobody knows everything. It's important to hear what are different people saying about that one thing.
Exactly.
Very, very important.
Yeah. So now once you assess all that, you'll be good to go. And then when you're listening now to the advisor, at least you'll know what they're telling you, and you'll be ticking some boxes because you've done your research. That is how you analyze a stock. Then from there, of course, there is now, how do I know the target price for next year?
When you say target price, you mean?
Like if I've analyzed all the fundamentals and I know the history is like this, we are likely to perhaps make this money next year. So some forecasting has been done. That may not be for you, but there is an expert that does that. And all the brokers have those analysts. And they'll be able to tell you. If it's ABL, if it's Safaricom, they'll be able to tell you, put your money here. If you're expecting to get this return, then this is a stock to invest in.
Okay, super. Thank you so much. In the meantime, we want to get into the lives of professionals who've been around for decades. We are segueing into Meet Your FA, coming up right now.
Know Your FA, sponsored by Diane Blair.
Today we are joined by a distinguished fellow of ICIFA, who was one of the founders of ICIFA. A bit of a background about him: he's the founder, chairman of FFA Investment Bank, a corporate finance specialist, an accomplished stockbroker and research analyst with several years in the investment industry and investment banking. He's the former vice chairman of the Nairobi Securities Exchange and chairs many boards in Kenya and the East Africa region. Quite an impressive and inspiring bio of none other than FFA Bob Karina. Welcome, FFA Bob.
Thank you very much, Diana, and thank you for that introduction. I started my career way back, but I've had two phases. The first phase, I was employed by the government of Kenya. I was a civil servant, actually.
Okay.
Then the second phase, I went into the finance world. And many people do not know I was once a civil servant. I actually started off as a clerk immediately after Form 4. I was 19 years old, and I was working with the Central Bureau of Statistics, which is currently known as Kenya National Bureau of Statistics. And while I was there, and I stayed a couple of years, I started asking my colleagues who I was with, since we were sitting in a pool of an office that has many desks and just one supervisor, I asked one of the guys I was sitting with, this guy who is our supervisor, how did he get where he is? Then he told me that what happens is that you enroll with the London Institute of Statisticians, do a course in statistics. Once you pass, in a year or two, the department will take you to Dar es Salaam. There was an Institute of Statistical Programs in the University of Dar es Salaam, where you are taken for a course for a year. Then when you come back, you actually moved like 3 grades in your promotions. So I embarked on it, and I studied, I passed, and then after 3 years, I was taken to Dar es Salaam. We were 6 of us, and we all passed in distinctions. Then when I came back, when I got back into the office, then I got higher roles. The unfortunate thing was that the person who was advising me on what to do never put in effort. So I became his boss. Then I went on rising. Then after that, I got the next opportunity, because in government, there are too many trainings. So the next thing that happened after that course, I was taken to UK to study what is called development statistics.
Okay.
Then after that, in another 3 years, I was taken to study computer data systems in the US. Sponsored by the USAID. Then after that, after another number of years, I was taken to Hong Kong to study computer-aided design and computer-aided manufacturing. Then after another year or so, I was taken to Singapore to study systems analysis, still by the government. Now, all this time, as you come, you are rising in your rank.
Yes.
By the time I left the government, I had even been moved because I would appear in many of the programs then, and they would call me in specialized meetings where I would be in charge of computers. So the ministry or the office of the president felt I should even move to the Directorate of Personnel Management, called the DPM, and I became the head of microcomputers. So I changed from statistical work to computing. In fact, I was feeling like after I finished, I was feeling I would have to change my career to open a school in computing. Because I was feeling I'm so knowledgeable.
Okay.
But after that now, this other opportunity came in where the government of Kenya felt they will open up the market. So they wanted to license 8 brokers. And now there was this other opportunity in the government that was created that after 40 years you can retire. So when I saw the opportunity in the market, I decided to take my early retirement. So I retired and went into the deep end of this pool without knowing how to swim. But I was confident that I'll go there. I had hoped that I would run the two concurrently, but the licensing authority said you have to be there full time. So what I did first was to take unpaid leave for 2 years, which they allowed. I came into the market and then looked for professionals. The unfortunate thing was that by the time you're actually applying for a license, you've already set up the farm.
Okay.
And to set up the farm, you're supposed to have at least trained people. You have to have a dealer. You have to have systems working. They have to have, that time the capitalization of stockbroking was 5 million. But you had to show you have capital worth the 5 million, either in form of systems, the equipment and everything. And they had to send, that time they were sending us auditors to come and confirm those things. So we would have Price Waterhouse come and confirm that what you are saying is correct. So when I got in, we came in 8 of us. First, the year before they had actually even licensed another 7, 94. So we formed FIDA Securities in 1994, but got licensed in 1995. In 1994, there were 6 first brokers. There, I don't need to name them, but I know them all, like in Francis Drummond, Dan Blair, Shamunge, Nyaga, and the like. 6 of them, Genya Kariuki, they were there, 6 of them. Then in 1994, they brought 7, where they brought in now Reliable Securities, they had Equity. There was a company called Equity Stockbrokers, and then they had Sterling, they had Ashbo. 7 of them came in. There was Bob Matthews, which is now currently partly owned by Coop Bank. Then we came 8 of us. We came Apex, we came FIDA, came in Standard Stocks then, currently Standard Investment Banks, Kestro, Discount, and the like. So we were 8 of us. So when we came in, there was the expectation that the market, since the market has been opened, now there will be a lot of work. Unfortunately, the market dipped. We had the listing of Kenya Airways in 1996. You see, we came 95, 96, the listing of Kenya Airways came in. But then thereafter, the market just dipped and struggled all the way up to 2000, when the index actually moved to its lowest. and got to less than 1,000 points, which is the lowest it has ever hit. So with the coming of the NAC government, the market reversed, and in fact, by that time, sorry to go back a bit, by the time the index was coming to 2,000, to less than 1,000, most of our colleagues, trading participants had to let go many of their employees. And like us, what I did was to tell the people who could stay with us to stay, but I can only afford half the salary. Those who could not stay with us, they had to go. In 2002, when NAC government came in, business just came in so much that the people who stayed with me, I was paying them double salary for a while to recover what they had lost, and also for staying with me. So things went well, and in fact in 2007 the market hit about 6,000 index, which is the highest we have ever hit. We haven't reached there yet. Then the post-elections came. So in short, there has been ups and downs, and but now we are now used to the situation. So when things are bad, like now during COVID, we still hold on, and I can say things are not as bad as we thought they would be by the coming of the COVID. I am one person who loves sports, and I have played sports since I was in primary, high school, and once I left high school, I enrolled into games like karate, I went to boxing, I played football, I played volleyball. So I played many games in my life, but I played the longest a game called squash. I played for at least 35 years. But with squash, after a while, you start getting hurt on your knees, and therefore you leave. So currently, I run, I jog at least twice a week. I do about minimum 10 kilometers running. And then I also gym, because they say other than running, you need to strengthen your muscles. So I do some gym work on lifting weights and the like. And then golfing. I've played golf for 30 years.
Okay, wow.
So I started golf even when I was as a civil servant. So I have played, and for those who play golf, the lowest I've played is handicap 7. So I'm still playing, but playing for them. But basically, it's because I love sports, and therefore I feel I need to do some work, one, to keep fit, and also to keep me healthy. In fact, you rarely catch me having a cold. So I appreciate the sports that I do. So basically, that's what I do, and also swimming. Yeah. What Warren Buffett says, that you be fearful when the others are greedy, and you be greedy when the others are fearful. What actually he means there is that you get into the market when the market is low, and you get out of the market when the prices are high. What means is that, when people are fearful, it means the markets are falling, and it means that prices are coming down. So that's the time you should be coming in, because people are selling. Because for the prices to come down, it means the supply is more than the demand. So you wait for that opportunity, you come in then. Then once it holds and starts coming up, then the prices can start coming back. Then they start coming back. When they start coming back, then you have now demand higher than the supply. So the prices go up, and then you get out yourself and wait for such opportunities. And then the other thing is you must invest in some knowledge in the market. That investment in knowledge is a big interest in the market, because without knowledge, you'll be just buying from those people who buy as what we say, a herd mentality, where you buy because your father, your uncle, your friends are buying without knowing really why they are buying there. But with the knowledge, then you will be sure that you are getting into it with something what is basically some fundamental basis as to why you should get into those companies. So I would say it is good to invest in some knowledge, and then you'll get there. Then another thing I would say is that in any company that you invest in, make sure the fundamentals of that company are sound. So even if you see the prices are coming down, it sometimes is like what you would call a hiccup. It's just a short time, but you know it's okay, just wait. And more than not, the prices usually reverse.
Meet Your FA, sponsored by Dyer & Blair.
Fantastic. I think we have come to the end of this show. We were learning about stocks and how to invest in stocks. We can't teach you everything here. What I love what Leah has said as well is the fact that there are brokers who have this information. We all do. And we have teams that do nothing else but research these companies. So get in touch and find out what can the professionals help you with in understanding and knowing how to invest in stocks. God bless you guys. Have a great day, evening, or afternoon, wherever you are. And subscribe to this channel so that you can find out additional information on products that are available to you here in this region and professionals that you can get in touch with. Take care. Bye.
On the next episode, we discuss investing in government securities with FA Anthony Mwithiga.